US. They keep thinking they're going to defeat China, and then they realize they can't. So then they sort of lick their wounds, go back to the drawing board, think we'll try some other angle, but every angle's failing.
They now have to keep printing or we crash.
We've got this ticking time bomb.
Talking gold with the one and only Andrew Maguire.
Welcome to Live from the Vault.
Welcome to Live from the Vault, brought to you by Kinesis Money. And this is the show that goes beyond the headlines to uncover the truth about the gold and silver markets with world-renowned whistleblower and industry expert, Mr. Andrew Maguire. And this week, he'll be joined in the vault by a very special guest. You know him, London Paul of the Sirius Report. He is in the vault. We're excited. Fasten your seatbelt. You know, we're talking gold, and you're not going to want to miss a second of this conversation. So let's head over to the UK right now and join Andrew Maguire and our featured guest, London Paul. So over to you, Andrew.
Well, thanks, Shane. And yes, this is actually, you know what? This is incredibly timely. Welcome, Paul, London Paul, as you're called. I can't believe, Paul, that there's been over 2 years since we had you on, but timing couldn't be better following the BRICS summit and the underreportedness of it and one thing and another. But welcome back.
Well, thank you for having me back. Yeah, I couldn't believe it as well. I look back and went, how time flies. But I think overall, I went back and actually listened to what we discussed 2.5 years ago to remind myself what we talked about. And we started discussing, obviously, multipolarity. And everything that we discussed is panning out and continues to do so. And the developments with regards to that are immense. And of course, ironically, a lot of that has been fueled, sadly, by developments in Ukraine, where, contrary to conventional Western wisdom, the global South embrace Russia, continue to do so. And therefore, consequently, many multipolarity developments have come to pass in that 2.5 years. And the momentum continues. And to coin a phrase, it's an unstoppable train. There's no way it will be derailed. And it always comes back to the point, at some point in the future, the West is going to have to deal and accept it is what it is. And rather than trying to think it can defeat it, which it can't, is to embrace it and to be able to work in with win-win cooperation, because it would be immensely beneficial to the West to work with these countries. I know there's, particularly Russia, huge ideological differences to overcome, and that's going to take, who knows how long it could take, a decade. It might take less, it just depends. But certainly with the Chinese, there's less baggage, and that would be a great starting point. Particularly, we're seeing it with Europe. There's a summit between the Europeans and the Chinese ongoing. But with regards to the US, they keep thinking they're going to defeat China, and then they realize they can't. So then they sort of lick their wounds, go back to the drawing board, think we'll try some other angle, but every angle's failing. And in the end, it'd be far more beneficial for the United States to find ways to work with them, because the sum of the parts of the United States as a reliable international partner, if they were, and that's a big ask, and China would be immense, not just for the two nations, but for the world at large, for sure.
Yeah, and I think it's bang on. And you know what, you were way ahead of the curve here. Over 2 years ago, there wasn't very many people talking about multipolarity and also really getting BRICS into the frame, which is now much more in the frame. And so I thought, what would be interesting, maybe, Paul, if we can pick up a couple of threads here, is that now what the amazing thing that I find gobsmacked, to be honest, is that how the mainstream media and I mean very few people have picked up on the fact some good stuff, some major stuff went down at that BRICS Rio summit, and it was really, I mean, if one was going to sort of summarize it. And obviously it's difficult to do that, but it is the tokenization and the financialization of real world assets. And between the BRICS nations, they have literally, if you add in the energy complex, grain complex, all the different commodity complexes that they touch themselves, trillions of real world assets are potentially going to be digitized and really put into with the gold backing. Basically, the way I look at it, you were looking at a 7-step settlement process outside of the SWIFT. I think it's so major, and I just cannot believe that nobody is focused on it. All they've focused on, Paul, is Trump's threats to tariff the hell out of these guys. When how the hell you can tariff? I mean, this multipolar majority control the bulk of all commodity assets that they either consume or produce amongst themselves. So why the hell should you use a dollar trade when you're actually when you've got these different nations trading amongst each other? It's amazing to me.
Yeah, but I think Trump's response proves just how fearful the United States is with regards to BRICS. And of course, one of their principal fears was this idea, and BRICS is not really concentrating on that at this particular point in time, was a so-called BRICS currency. And to sum up really eloquently why it is not a priority for them at the moment, and I will use the euro as an example. The euro currency was doomed to fail because you're trying to marry disparate economies, say between Germany in the north and Greece, Portugal, etc. in the south. It was destined never to succeed. They don't want to make the same mistake, so they have disparate economies. There's a long way to go to marry those economies together, which is going to require all these other initiatives to be implemented, not least the development of the new development bank and this investment fund that gives loan guarantees that will avoid basically the World Bank, the IMF, etc. You have to start to put the building blocks in place to take advantage of these enormous commodity that the BRICS countries own or have access to. So until you get those building blocks in place, there's no point really worrying too much about what a BRICS currency could be or will be in the future. And that's why, principally, and this has been something we talked about previously, the focus is on trading in local currencies between the countries. So we know, obviously, China and Russia trade almost 100% in the ruble and the yuan. That's just a very obvious example, but extrapolate that between the other countries, get those processes working, and that is a major step in terms of de-dollarization. Now, of course, the Americans think, well, they're going to launch this currency in international trade. That's going to cause immense damage to the dollar, so they're terrified of the consequences of that, so they threaten them with 100% tariffs, and then recently Trump went 10% tariffs because the tariff debacle was best highlighted by the nonsensical situation with China, where whatever the United States said they were going to impose on China, China came back and said, right back at you, America. It got up to 145%. And then the Americans turned around and went, hang on, we can't export anything to China. We've just shot ourselves in the foot. Okay, let's walk that back. And then we'll put some sort of pause on this. And then they claimed there's some trade deal with the Chinese, which there isn't. There's nothing there. There's nothing of substance. They still got to sit down and reach an agreement. But the United States tried to railroad China and, of course, miserably failed to do so. So with regards to BRICS, therefore, local currencies is the way forward. But also, there's a lot of discussions going on where you will not hear or see any discussion or development. They want to keep things quiet. And whilst in the process of developing cross-border trade, being able to look at, as you rightly point out, trading commodities outside the dollar, that's another extremely important discussion point. And basically finding ways to optimally trade with each other and to be able to take advantage of this enormous resource base they have, because it's not just, of course, the Russians who have enormous resources that are untapped. And, therefore, on that basis, it makes sense to just go about their business, keep quiet about it, don't overplay it, don't overblow it, don't antagonize the Americans too much. You might do something harebrained as far as they're concerned. But this development with the new development bank in terms of trying to massively fund investment, infrastructure projects, etc., with these loan guarantees is a huge step forward. And it's those kind of things that will eventually allow BRICS countries, because more and more want to join. There's probably another 20 or 30 that would like to join, but you have to be a bit careful with these kind of institutions that they don't grow too quickly, because then you've got to start catering for the needs of other countries who arguably you might say are not really in a position at this point in time to join. They can be observer countries, but not full members. And unlike the European Union that railroads countries into the European Union or into the Euro who should never have joined, that's not how this process will work with BRICS. And it's also worth noting it's not really an alliance as the West perceives an alliance to be. So this is why you can have countries like India who disagree with something, and that's not a problem. No one has a problem with any country disagreeing. Not every country has to sign up to all the initiatives. And for those people who say, well, India is going to get kicked out by the Chinese and the Russians, no, that's not the intention. And in fact, 2026, India has the presidency of BRICS. They've already shared the kind of things they'd like to push with regards to BRICS with the Russians and the Chinese, who are very happy with these developments. And, after all, Modi did turn up in person. Putin didn't because of the risk of being arrested because of the ICC ruling. And Xi didn't turn up because he had something personal to deal with, therefore sent an able deputy. And people, again, tried to read far too much into this, but I think when people try to find spurious reasons to suggest BRICS is dead and buried or never got off the ground, they say it out of fear, not out of anything tangible. But there are probably, as well worth noting, maybe 20 or 30 committees. They're all working on different projects in BRICS. They don't report these things, but they just get on with whatever they're looking at. And the important thing for BRICS as this loose alliance, and I will say that even though it sounds like I've just contradicted myself, is they have to get things right first time. Because if they fail, then the world will look at them and go, well, we thought you were the alternative, and you proved yourself not to be the alternative. And you don't want to turn away a whole bunch of nations who just want to join or have recently joined. So that's the old adage, get things right first time. Otherwise, therefore you're going to have serious problems. So I wouldn't be too worried about what a BRICS currency will look like. I would suspect at some point in the future that will surface. But for now, it's not a priority. They've got far more important things to get on with. And if as a collective you build the economies of these countries up, where they're able to fully exploit the resources they've got or access to resources to put the infrastructure in place, whether that's roads, railways, bridges, ports, whether it also, of course, relates to technological or the sharing of technology. That's something else that's very much prevalent in the BRICS thought processes now. But of course, like anything, you have to standardize these things and make sure everything is written is satisfied by international law, something perhaps in the West we ought to pay a bit more attention to as well. So the regulatory side of things, whilst has to be at a minimum, has to be in place that satisfies the needs of all the participants and isn't skewed to favour, say, for argument's sake, the Russians and the Chinese. So I think overall that kind of sums up the BRICS summit in Rio. And just wait for the odd announcement. You can glean some stuff from the communiques they write, but not an awful lot. But the essence basically is we're going to produce cross-border trade that will be able to be utilised by all participants. And for now, though, just stick with local currencies, avoid using the dollar, and do everything you can to avoid, obviously, in the future, we don't want to use SWIFT. We want alternatives. The Chinese, of course, already have SIPs as one example. And just a small point with regards to that, people don't understand just how huge that is already, because in 2024, in cross-border transactions, they processed 175 billion yuan, which is more or less $24.5 trillion equivalent. That was up 43% from 2023. And by all accounts, the figure is going to be substantially higher in 2025. So again, this is China trading with a whole bunch of nations who will be utilizing the yuan, not utilizing the dollar. And if we look at all the SWIFT data, it doesn't take into account SIPs. And in any way, shape or form, when you start to stack up the amount of trade that's going through SIPs and other interbank payment systems that exist that the world doesn't even know exists in countries who they're utilizing them, but not telling the world they're utilizing them because they don't want to, at this point, upset the Americans, then you start to realize that the SWIFT figures don't really mean an awful lot. But let's be honest, I'm not suggesting at the moment the yuan's trading more internationally than the dollar. No, but it's increasing significantly, whilst it's very clear de-dollarization is a reality. There are still people, but increasingly less so, trying to pretend that isn't the case, but it is. And there is a lot of now data that supports that viewpoint very eloquently.
Yeah, and SIPs, I mean, I don't think most people realize the SIPs already interconnects with like 4,900 banking institutions. It's growing every day. And my understanding is that those particular SIPs settlement transactions overtook SWIFT in April.
Yeah, it could well be. I mean, it is growing hugely. And really, when you look at China alone, I think in 2024, by the end of 2024, probably about 45% of China's trade with other currencies was then settled in yuan. It doesn't mean the rest are dollars, absolutely not. And that's more than double what it was at the end of 2022. So there is this huge increase in trade. It's rather like the Saudis and the Chinese in terms of trading in oil. I mean, Saudi's interesting because they joined BRICS, but then kind of claimed they weren't in BRICS. They are, but they're keeping a low profile almost. They attend meetings, but don't actually officially admit they're in BRICS. But in terms of trading in oil with the Chinese, there's definitely a component that's now traded in yuan. And this is why China has effectively opened up its gold trading market. It wants to open up vaults in the likes of Saudi Arabia. And this goes back to something we put out on YouTube, which was China effectively did announce the gold backing of its currency because it said in international trade that the yuan is fully convertible into gold. This is why they're opening vaults in Hong Kong. They want to do it in Saudi Arabia. Now, why would they do it in Saudi Arabia? Because if China and Saudi Arabia are trading in the yuan, then if the Saudis want to, they can either take that yuan and spend it, or they can take the yuan and say, we'd like it converted into gold. And that's equally possible. And there are no restrictions in place, which is, for me, if it's fully convertible, that's the very definition of gold back. Now, not a lot was said about it. It's been pretty quiet. There was some attention to it in the Chinese media. I know people over there who said to me it'd be quite helpful if you put that out and explain what's going on, which we did. And it's reality. And it might not square up with what people like to believe to be true, but it is, and it is by definition a gold-backed yuan on that basis. Now, will countries avail themselves of that opportunity? Yes, they will do in the future. But China was never going to sit there and go, well, we've got a gold-backed yuan and we're going to tell the world. They'll just quietly put a mechanism in place, and global south countries can either take that yuan and spend it however they want to, or they can therefore just say, no, we'd like to exchange it for gold. And those possibilities are now in place. And this is why you will see China open vaults up all over the world to satisfy the need for countries who, rather than saying, well, I'm going to get the gold from Hong Kong and then I'm going to have to ship it back to Saudi. We have the facility in Saudi. There you go. You can just take the gold or you can leave it vaulted there. It's up to you, whatever you want to do. And they won't have to wait 7 years like the Germans did to get, obviously, about 300 tons of gold. They can get it instantly. Well, within whatever the contractual agreement is, but it's not even weeks, and it's certainly not years.
Yeah, and I think as liquidity, and obviously as physical market liquidity flows into the West End, we have some really good connections. Our liquidity providers are very face China, face Russia, and obviously some of that stuff is not official because obviously there's sanctions against Russia. But I'm not saying our liquidity providers, but we are in contact with liquidity providers who are reliable. And I think what it is that we're seeing as this liquidity pours into China, and as you say, they're opening up vaults all around the world. Well, it's due to the very fungible nature of gold. So if you have gold vaulted in global vaults all over the world, and you have a transaction, it can be T+0 settled by simply moving it across from one vault or to the other side of the vault into that other nation's area. And of course, then it's globally fungible. So it doesn't have to move at some point. It doesn't actually have to move at all. So, because then say if it's in Singapore and it's against Brazil, then, why would you need to start shipping stuff around when it's a high quality, first tier, high quality liquid asset? It's a first tier asset. So it's cash, it's money. So to me, this is a game changer when we see that kind of stuff going on. And the very fact that you're talking about China backing the one with gold, they need to buy gold, and they are accumulating gold, and they're accumulating it at the West's expense. What are you seeing there?
Yeah, absolutely. It continues. We talked about this 2.5 years ago, and it continues to grow, and there is enormous amounts of gold heading to China, Hong Kong. Also, silver continues. We spoke about that. That carries on, not just solely China, but China is buying up, as we've said then, and has done for the last 2.5 years, as much commodities as it can get its hands on. So that includes copper, it includes aluminium, it includes everything that it would regard as strategically important. It puts them in a reserve that's a matter of national security. It never discloses how much it holds. And why should it? It has no reason to do so. But at the end of the day, one of the big pushes for China in terms of wanting to internationalize the yuan is going to be eventually the capability to price commodities in the yuan. That's clearly going to be a goal. It already is to some extent. They have got odd contracts in place, like with Brazil, where they trade commodities priced in yuan. But they want to internationalize that and grow it significantly in the future. And also by taking strategic positions, it accounts for what they perceived where there'll be shortages in the future. I mean, for me, it's very obvious there are global shortages of physical silver. That's irrefutable, even from very basic international data. So partly that's to do with the Chinese and the Indians. But if you perceive there's a market where no one else is buying, which happened during the pandemic, China took the opportunity to hoover everything up they could get their hands on. And it's also worth noting with regards to the internationalization of the yuan, that more and more investors are actually taking money out of places like the United States. This is something Trump's much flawed tariff policy has resulted in. Investors are taking money out the US, selling dollar-denominated assets and buying Chinese bonds. They've even ironically been going into Europe, buying European bonds, like the German bonds. It's incredible to think they would do that, but that is how little confidence there is in the US dollar, US Treasury complex. And obviously, one thing we noted, and it's not unique in us thinking this, is how much the US Treasury is given way to gold as a global reserve asset. It's absolutely crystal clear that is the case. And that is partly because there is a total lack of confidence in the United States as being, or the US dollar, US Treasury complex being a safe haven. I mean, and part of that came about because, we talked about it back then, the Ukraine war and what's happened subsequently, because the US decided to remove Russian banks from SWIFT, including the Russian central bank, and also, of course, freezing hundreds of billions of dollars of Russian assets and reserves in, for example, Europe. The world didn't take too kindly to that, especially the global south. And obviously, the one thing from China's perspective is they're going to gradually open up their financial markets. They are allowing more overseas investors. They're starting to put mechanisms in place in Hong Kong, which is obviously offshore China, but it allows very ease of flexibility to connect to onshore China. So that process is ongoing as well, and that's to do with like Bond Connect programs or being able to invest in China via Hong Kong. And because China knows if it really seriously wants to internationalize the yuan, it's going to have to open up its financial markets, but it wants to be extremely careful. It doesn't want to have predators coming in from the West causing all manner of problems. But so far, they've been successful in doing this, and there's no doubt that a significant amount of money is now moving into China. Ironically, it's worth noting, despite sanctions, people have not widely reported how much the ruble's appreciated against the dollar. That's because quite a lot of money, even though there's supposed to be sanctions in place, is moved out of the dollar into the ruble and is investing in China. So, it's like the age-old problem. It's only sanctions when it suits the Americans. But if there's investment opportunities in Russia, we'll just turn a blind eye. But that's why, because there's been a big move into the ruble, which will surprise people. But that's why you've seen this big shift in the currency. And increasingly, this is the problem the United States is facing, a lack of confidence. They don't trust the Trump administration. They don't trust Trump's tariff policies. 1 minute he says one thing, then he says something completely different. And that's caused huge amounts of money to be pulled out of the United States. It's also why an awful lot of US treasuries are being dumped, and they've been trying to find someone to hoover up those treasuries who are being dumped. I don't think it's any surprise that apparently, in inverted commas, the UK holds more US treasuries now than China. We all know the state of the UK economy and the financial system. So clearly there's something going on there to try and alleviate the enormous amount of treasury dumping that's been going on. And the other thing is, this is also a lot of traditional US allies are doing this. So the Japanese, for example, have been pulling out of the United States and going back and investing in in Japan. Also, this is the case with Middle Eastern countries like the Saudis, who have pulled out the investments out of the United States and investing in countries like China, for example. And the amount of increase in trade and between those two countries grows significantly. And it's not just in the energy sector. There's enormous Saudi investment quietly going on inside China because it's win-win cooperation. This is why the idea they can't trade in the yuan is ridiculous, because there's plenty of opportunities for the Saudis to spend the yuan wherever it suits them, and a lot of that is in the internal Chinese market.
No, that's really interesting. And I think most people haven't thought about this. And I certainly, in fact, I hadn't really thought about it myself. But, what's interesting, you must have mentioned silver. We got a lot of silver subscribers. And you mentioned silver, and certainly, I think one of the things, shortages. You talked about shortages, and there's so much evidence of that. It's under our noses. And when you think about it, I mean, when was the last time we saw a massive EFP spread of nearly $1 in silver? In other words, the EFP spread would be I'm now asymmetrically imbalanced against my swap position, and I have a short on the COMEX. And I'm now having to pay a big premium to buy it back. Now, we witnessed that on and it's just these footprints are in our faces. So on the 11th of July, that's when silver kind of broke out. And at that point there, we recorded, and we've got it recorded, a 92-cent COMEX premium, $4,600 per contract. Ouch, if you are on the wrong side of that, just to be able to buy back that position. And we saw that at COVID, we saw it with gold when it was nearly $100 premiums to buy back positions against spot. So, and today it's still 40 cents, and we've got silver approaching $40. So, as you say, all of this evidence is under our noses. And yet, I think one of the key things that I'm trying to make the point of here is that the LBMA cartel has lost control of silver. And yes, we're going to see games with options expiry coming up on Monday. Of course, we're going to see the usual attempts, but it's lost control because the physical silver market is now the price of silver is being settled in a physical silver marketplace where you have to own a bar novel before you can put it up for sale. And this is really backwashing. And I think those days are numbered for the cartel.
Yeah, I mean, I absolutely agree in the sense that I always made the point the day you start to achieve price discovery with gold and silver is the day when the paper markets break down. And they break down because the imbalance between the paper and their physical requirements becomes something that is just untenable. And we're increasingly getting that way, and a lot of that is down to the Chinese who created arbitrage, which shifted even more, and it's not just silver, but also gold, east. Also, it's worth noting Russia very quietly slipped in silver into their basket of strategic reserves. So in terms of, they have a basket of currencies because they have huge trade surplus. They now include silver in that. How much silver does Russia have? We don't know. It's probably significant. So this is putting all this extra strain on a lack of physical in the West. And you only have to start to see a sudden demand for physical in the West. And, if there's already a shortfall, I'm just going to pluck some figures. Don't take them literally to anyone who's listening. But let's just say, for argument's sake, for every ounce of physical, there's 100 ounces of paper silver. Well, if that physical starts to diminish globally, because there's only so much global supply, you can't sort of have this idea. Well, we can plug a gap here, and because if you try and plug a gap somewhere else, or there's big demand because huge amounts of silver is moving to China or India, you're going to have a shortfall. So maybe, just to illustrate the point, that 100 ounces of paper to 1 ounce of physical may actually then technically become 200 or 300 or some figure where suddenly someone goes, hang on a minute, we've got some serious problems here. Because if suddenly there was a huge demand for physical settlement, we're going to be in serious trouble. We are then in the force majeure moment. And then that's when the paper markets break irrevocably for me. And I think we've had some instances where I wouldn't say it was going to happen, but they were perilously close to that. And I think what you've just highlighted is one of the examples that demonstrates why that's the case. And yes, for sure, there's going to be gyrations in the market, but I think the paper side of the gold and silver markets is becoming less and less pronounced. And also at times, and I've observed this, and I'm sure other people have, where we've seen smashes on gold and silver markets in the West overnight Asian time. And from what I understand, quite a lot of the time, that's the Chinese actually doing it. I think the Chinese have far more control over aspects of the Western gold and silver markets than perhaps people realize, and not just because creating arbitrages and hoovering up as much physical gold and silver as they can get their hands on. I think they've also, to some extent, when it suits them, been moving the market, because to happen overnight Asia time is not something, I mean, correct me if I'm wrong, that was something that happened previously. This is something that's been more prevalent probably in the last 12 months or so, on and off. It's not all the time, of course, but we have seen instances where that's happened. Then the following day, the price has recovered during sort of US, London market time. So maybe I'm reading something into it that isn't there, but I suspect, not always, but certainly at times, it appears as though it is suited the Chinese, shall we say, to have particularly silver prices lower or as low as possible, because if you're trying to hoover up as much physical silver in the world, why would you want the price to move too quickly, too soon? But there comes a point where in the end the price has to move, because the physical silver that's available in this example in the world is becoming more and more of a problem. And, I have, obviously everyone knows who's ever listened, I have obviously gold and silver holdings. That's a statement of fact. And I have quite a sizable silver holding, and I have contacts China who periodically get in touch and go, we'd like to buy all your silver off you. And they'll give me a premium to the current price. And the answer is always no. And I said, the day will come when I'll gladly sell it to you, but not for now. And I don't have a price in mind, just circumstances will dictate to me when it's better to hold real world assets rather than the paper priced assets that we currently see. When that disparity disappears, then I think gold and silver will achieve true price discovery. And silver, of course, relates also as an industrial metal, clearly. And then that will be the time for me to then consider selling some of those gold and silver to buy some real world assets that are priced not based on idiotic Western financialization, but priced on the basis that the asset is worth it should be. So, property is a great example of that, where you have all these ludicrous bubbles where property is way overpriced and in no way, shape or form has any basis of reality attached to it. So, yeah, I think silver is something that people should pay attention to. I think the price is interesting, but the general trajectory, particularly in the last 2 years or so, is, I think 2 years ago, it was about $18 an ounce, something like that. Well, October time, 2023. It's now more than double that. I don't do price predictions. It's not something I'm particularly interested in. But I think the case for silver is self-explanatory, given it's also an industrial metal, and the demand for silver is only going to increase due to all the technological advancements that we now see in the world.
Yeah, and I think, the point that I'm getting from you is it really is, it's about valuing silver based upon a true physical supply, demand, price, and marketplace. And yes, obviously, and I fully concur with you that there's times, why wouldn't you go and attack the COMEX paper positions? Why wouldn't you, knowing very, very well that there are a lot of speculators in there, and you can work out where their stops are just based upon really, what the information is there. So essentially, then you can rinse those out, pick up the discount, and away you go again. But I think what a lot of people forget, and I've talked to a lot of people who have never been in silver before, and I say, do you know what? People forget that is actually money. It's actually a foreign exchange cross against the dollar, the yen, the euro, etc. It's amazing how few people, they think it's just another commodity, isn't it? But it's not. And I think while spot silver isn't yet Basel III compliant, it is a deliverable FX cross against the dollar. So essentially, yes, you would have to, in the past, when we tried to buy in the past, it would be that plus a premium. And then you'd be even restricted as to how much you could have. But I think that is starting to evaporate, because if I now am trading in a physical marketplace and I offer a price there, who somebody who owns a physical bar is willing to sell that for, then we've got a real price. And I think so. It's kind of that, in a sense, backwashes into the global fix for silver, which is the benchmark fix, where producers and refiners are locking that price in, or forcing hedging strategies upon your producers in a counterintuitive way. Essentially, I think the physical price is starting to evolve, and it's only just starting to evolve as this backwashes into this huge, as you say, 100 to 1. I mean, Jeffrey Christian at one point said 500 to 1, and so what? So it's backwashing. And I think this is a really great time, as far as I'm concerned. Yes, I own silver, but I keep saying this is a great time to be looking at silver as an asset class.
Yeah, you make a really important point amongst all the other points you've made, but but one thing that when you talk about silver in relation to FX, what I think is very telling, I think what's driven as well the price of silver is as much the reason of what has driven the price of gold in dollar terms. It's a lack of confidence in the dollar. It's a lack of confidence in the dollar US Treasury complex as a safe haven. And there's the belief that, particularly obviously, gold is a reserve asset. I'm not suggesting at this point silver's a reserve asset, but I think the price increase in dollar terms is also being driven by this lack of confidence in the dollar because of the US's behavior, both in weaponizing the dollar, what went on in Ukraine, but also this whole tariff debacle, which has caused the United States immense damage internationally, because it's caused even traditional allies to actually get rather angry with the Americans. Countries like Japan, who've been very subservient, a typical vassal state's already starting to flex its muscles and say we've had enough and we're not going to tolerate this kind of level of bullying anymore. So I think that is a very important point to make with regards to silver, and not that it's just an industrial metal, because clearly, if countries like Russia are buying it and holding it as a strategic asset or in their reserves, well, that tells you that they regard that as also being the case. And I think a point worth making, just to move into gold momentarily, is a lot of people don't realize Russia is actually the second largest gold producer in the world after China. And that's going to begin trading physical gold on what's termed the St. Petersburg International Mercantile Exchange by the end of this year, 2025. They want to establish domestic price benchmarks. And what a surprise, it wants to reduce its reliance on the LBMA. So the managing director of the St. Petersburg Exchange came out and said, in the gold market, our goal is to ensure the formation of national price indicators that are independent of international benchmarks based on the balance of true supply and demand in the Russian market. So they're now spot trading on gold bars. I think there's a kilo gold bar and a 12 kilo gold bar. And you can be an eligible participant if you're a miner, refiner, banks, industrial users. And what Russia's making its statement abundantly clear. And this is why all these developments are going to end up posing a threat to the LBMA COMEX, inevitably. And the same statement comes out if you talk to people all over the world, excluding in the West. They just want things like gold and silver and other commodities to be based on true supply and demand, and not some shenanigans that says, well, we don't like this price. I know we're just going to dump basically the entire physical silver production in a year in 2 minutes. But honestly, it's legitimate. We're actually selling all this physical silver. As I always said to someone once who said that to me, well, tell me who they're selling the physical silver to, because someone has to be buying it. And of course, the answer is no, they're not, because how could you possibly sell all that physical silver? Because it doesn't exist. No one has that much supply. I mean, there's an argument. Maybe China does, maybe India does cumulatively, but they're in no way are they going to start dumping that kind of silver on the market. So it's obviously not physical silver. And these countries are going, well, we want commodities truly priced, based on supply and demand. We want them to be in non-Western markets. We want them to be not denominated in the dollar anymore. And it comes back to what we said with regards to BRICS and wanting to have commodities priced in non-dollar terms. Well, this is one of many, many examples where a country like Russia will put this into place by the end of the year. And that can easily be internationalized and utilized by, in the future, countries who say, for example, want to trade with Russia, and they say, okay, well, we agree not in dollars. And Russia says, we'd like you to take rubles. And they go, okay, we'll take rubles. And then what happens eventually when Russia goes, do you know what? We'll make it fully convertible to gold. So you can keep the rubles, and maybe you want to buy things in Russia with those rubles. Maybe you don't, but you know what? You can have these fully convertible into gold. That isn't in place now, but don't be surprised when Russia makes a similar announcement, because all these countries, you see all these new gold markets turning up all over the world, and with exactly the same statements. And there is an inevitability in the end. They have to pose a serious challenge to the status quo, which is obviously the West. And over time, that is going to put more stresses and strains on those markets. And in the end, they either have to shape up or, frankly, disappear, because if you keep trying to manipulate these markets, in the end, one day you're going to get caught with your pants down very, very badly, and it's going to end spectacularly badly. So if they want to keep going, they're going to have to evolve into a market that is more based on supply and demand. Otherwise, the Russians, the Chinese, and every other country in the global south who want to operate on that basis will just corner markets, and the world will trade on that basis because they then believe that's a fair market, and everybody wants to see that. And there's plenty of Western people who'd like to see that with gold and silver.
Yeah, and as much as Russian gold is sanctioned, it's sanctioned into the Western-facing markets, not sanctioned into the essentially into China, for example. And you talk about China backing the Yuan with gold. You're talking about Russia ultimately backing the ruble with gold. But gold in itself, physical gold, is fungible. It's the only fungible asset on this planet Earth where you can actually pin it down to an exact exchange price based upon supply demand. So if you've got supply demand prices being developed in between Russia and China, for example, and those BRICS that nations that interact with that, how can you have a separate price in the West? Because if that is underpriced and you want the supply, then you're just going to go to the West and take everything on offer, take everything that's unallocated, and then alchemize it into physical.
Yeah, absolutely. And this is part of the problem the West has suffered because, you know, for example, China's market is the Shanghai Gold Exchange. The contract doesn't exist like this, but if you had a 1 ounce contract, it's backed by 1 ounce of physical 1-to-1, absolutely guaranteed. Now, and therefore, on that basis, someone can take gold or silver they buy in the West and go, well, it's a nice little arbitrage here. And then they can go and sell it to the Chinese, and they'll go, thank you very much. Very pleased to take it. And that's why, in part, there's been this enormous move of gold and also silver for different reasons to the east and China, not exclusively. But I mean, there has been numerous central banks all over the world buying gold. We've even, of course, seen Poland doing it, Hungary doing it, the Czech Republic did it to some extent. So countries all over the world understand that the writing's on the wall for fiat-based currencies. The what I would call US hegemony, the US empire or the Western empire, the dollar-based empire is rapidly coming to an end. We spoke about that previously, and it's interesting, when I first talked about this happening a decade ago, I had people genuinely asking, had I lost my mind? And I said, no, watch what happens. And the same people actually have come back a decade later and going, you're right. I don't know how you knew it, but you were right in it. And they admitted, even a few years ago, they'd seen these changes. But I think for a lot of people in the West, they're very frightened what this means, because they think China wants to be an hegemonic power, which it doesn't. It has no desire to have a world reserve currency. There won't be one in the future because it's pointless having one. You don't need them. You might want to internationalize your currency, fair enough, but the same could be said in the future for other countries. And maybe one day the ruble will be internationalized because China has an enormous commodity base, not just in terms of energy, but also in food commodities and other, rare earths, etc., and other things like copper, whatever, right across the board. They've hardly exploited any of those resources. So why not? Why is that not feasible to happen in the future? I think it probably will be. I can't see the West ever utilizing that on that basis, but not for the foreseeable future, but the global South will gladly do so. And it gives confidence in a currency. And this is why, if you trade internationally with the Chinese and the Chinese said, look, this yuan's fully convertible into gold, that is going to be a huge incentive for countries all around the world to go, well, I'm happy to trade in the yuan. Because, if I'm not happy holding the yuan, I can, and also that's the other thing, it's to sell it at market price. It's not a fixed price. That's a huge incentive, because then that will even out Forex fluctuations. So everybody's very happy on that basis, and China's quite happy to do it. Well, if China does it, Russia could do it. Who knows in the end, maybe the Saudis will do it. I'm not saying that's the case, but Saudis got very interested in having gold exchanges also. So you can see this pattern developing all over the world. It just largely isn't happening in the West because, like everything, the West rests on its laurels and wants to believe that, US hegemony is here to stay. And it's almost like now with the US thinking, well, we know the dollar's in trouble. We can't admit it. We're going to pretend the dollar's really strong, but I know, let's launch a stable coin. The reason for doing that is precisely because they know that in the traditional sense of the word, the dollar is no longer perceived to be, or the dollar US Treasury complex perceived to be a safe haven. The world is gradually de-dollarizing, and in some cases rapidly so. So they're going, we're in serious trouble. I know, let's launch a stable coin because suddenly the world will embrace us once again and believe in us, because we'll create an alternative to SWIFT. Because why do they think people are de-dollarizing? They don't trust SWIFT. They don't trust the US. So why would they trust a new system? Oh, because it's called a stable coin and it sounds stable. So let's suddenly re-embrace the dollar, re-engage with the United States. It's not going to make a scrap of difference. But that's the US basically admitting we're in serious trouble. People are rejecting the old system, and therefore we'll come up with a new idea and somehow the world will embrace it. Well, the world isn't going to embrace it. The only way the world will embrace the United States going forward is if the US behaves like a responsible custodian, behaves in a way that isn't trying to bully the world into submission, and actually treats people or nations as equals, and actually becomes the country I would like very much the United States to be, which is a great nation amongst equals. If it can ever get to that, it'll be hugely beneficial to the United States, but also hugely beneficial to the world. But at the moment, we're a million miles away from that. And this is why the world is rejecting the dollar. So good luck issuing stable coins and all the problems that will ensue in that respect, and all the risks that can pose to worryingly a global financial system, not just the United States. But that's a whole separate discussion for another time.
Absolutely, Paul. And I think you've covered a lot of stuff here. And I think the other thing, I think one of the things that came to mind when you were speaking is that how little trust there is in the let's just say the LBMA CME ring-fenced marketplace, which is, and I think what's happened is because there's so little trust, even the World Gold Council came out and did a survey of, I think 36 central banks came out and said, yeah, we're buying gold directly from artisanals, we're not going through London anymore. So it's interesting. So that, if the price isn't really being settled in the at the AM and the PM fixes in London, or the silver fix at noon, if it's not being settled there, then where is it being settled? And the thing is, what's the real price? And I think people are saying, well, I don't trust any of that stuff. So basically, I'm just doing deals direct. I'll take ownership stakes. I'll just literally make agreements. And I think the LBMA, CME are losing control to be able to actually set a price, an FX price for gold and so on.
Yeah, absolutely. And it's another point worth making, and it's something that happened after we last chatted at the back end of 2022 through 23 and 24. Xi kept making visits all over global South countries, and it all related to investments in mining operations. And it wouldn't just be gold. I know silver's a byproduct of things like zinc, copper, etc., but there aren't many pure silver mines in the world. But he was going everywhere, signing deals, and no one really paid attention to it. And they should have been, because that was China also saying, we want to secure access to resources all over the world. We want a stake in them. Well, maybe it's that China's financing it, then gets the commodity out of the ground at a cheaper price, or it might be that they just have a 51% ownership. There's various deals being signed, but they were going everywhere, and she was traveling. I mean, Brazil was one example of this, and they were just securing mining operation after mining operation. And there's no doubt, in part, this was to ensure the West didn't get their hands on them, because China's perspective is, well, the more assets that we own around the world, then we have a better chance of controlling in terms of having true price discovery. And in the future, because we have ownership of enormous commodities or resources, we can then start to price these in the yuan in the future. And there is some evidence of that already happening, albeit in rather limited sense, in the conventional sense of how commodities are priced in dollars. But it's growing rather like SIPs and every other metric we can measure the yuan in terms of its internationalization. So that was something I thought worth mentioning, because it largely went unnoticed, and telling some people, they were going, why is Xi traveling everywhere? What's he doing? What's the point? I mean, why does he want all these photo opportunities? And he wasn't going for the photo opportunities. He was going there to ensure that these deals were got over the line as fast and efficiently as possible. And I think we'll find in the future China owns an awful lot more resources globally than we actually understand to be the case.
Yeah, and when he's traveling, in his back pocket, sans Tzu.
Yeah.
Yeah. So, and I'm sure he knows it back to front. But Paul, Thank you so much for sharing some time with us today. And as you say, we have to circle back on this because I think we've only just re-engaged with you here because I don't know what happened. It's just that we got busy. But this is right on point. You were way ahead of the curve on multipolarity and what it means. Thanks for the update on what you're seeing now. Obviously, you've only scratched the surface. Really love to pick this up again, Paul, when you get a chance. So maybe next month.
All right, look, I'm fine as long as I get a bit of notice. So I can gladly come back on, and maybe we could talk some more about the big sort of multipolarity developments, things, for example, we won't discuss it now, but going on in Russia.
Yeah.
Particularly like Russian Far East and what's going on with ASEAN countries, what's happening with regards to this so-called North-South corridor. The list goes on, and I think that will demonstrate to people that the Belt and Road, multipolarity is very much in the ascendancy. A lot of people think it's kind of died a death and nothing's happening because they all think China's bankrupt and has got no money to build anything, and yet China keeps going all around the world, building more and more infrastructure. So clearly it's not run out of money as people in the West or many people want to believe to be the case, because they're terrified that Russia will take over the world, even though, of course, that's never going to happen. So, yeah.
Well, it's great work. Thank you, Paul. And thanks for sharing your time today.
And thank you.
All right. Thanks for joining us on this episode of Live from the Vault, brought to you by Kinesis Money. And a huge thanks to Andrew Maguire and our featured guest, Mr. London Paul, for cutting through all of the noise and sharing insights that you just won't find anywhere else. You just won't find even on mainstream media. And if you like this episode, hit that subscribe button. Make sure you give us a like. Turn on those notifications so you never miss out on this important information in these historic times. So, and don't forget, by the way, share this episode with someone who really needs to hear the story behind the headlines in the precious metals industry. So we're back soon with more hard-hitting truths inside precious metal space. So until then, thanks for watching, and we'll see you next time right here on Live from the Vault. Bye for now.